Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fine.
Good morning, everybody. It's Friday. That was a short week, actually. Interesting week, too. Hold on, where's my music? There we go. Oh, that's too loud. That's too loud. And it's coming out of the speakers. We gotta fix that, too. All right. Well, anyways, we do have some stuff going on today, and sorry I screwed up starting the thing up, so I don't think very many people are going to catch us starting out right here at the very beginning. But let's go through the charts anyways. Treasuries, they were kind of struggling and were range bound during our session yesterday. They did end up recovering and pushing up. And we're considerably higher this morning. They moved up quite a bit overnight. Here in the S&P 500, kind of a similar story. Ended up pushing up overnight. Oil maybe finding a floor. Man, did oil get savaged yesterday. That's like a good, what, $3 or $4 over in oil? Man, gold doing okay. Silver doing great. Oh, silver is doing great. And here, here's, oh no, sorry. I wanted to look at copper. Copper's okay. When you look at ES, we're getting close. 45.67. Okay. Coming back over here. Bitcoin. Yeah, Bitcoin keeps pumping and then selling off. So I don't know what that's about, but it is doing its own thing and doesn't seem to be affected by the rest of the market. And then we got the dollar. The dollar's still looking weak this morning. Now, over here, I had some swing positions on yesterday, and I still have them. But because Jigsaw has a bug still where it does not recall the positions correctly when you restart. So in order to show them, I'm going to have to modify them. So I think I have two contracts on, and I want to take one contract off at 45.40 here. So I'll put one there. And then let's try. Oh, are we getting news here? I didn't think we had news. Oh, we have the housing starts number. Okay. There we go. So now you can see my position in ZN. Sorry, what price did I get filled at? Filled 0.5. Okay. Okay, so the housing starts number was 1.372, slightly above the expectation at 1.35. Okay, so now I got that all filled out. Well, I guess maybe I should have waited for that news and then taken it at 109 even or something like that. But come on, E-mini, just fill me at 45.40 so we can see. So we can see how amazing that position did. There's something I wanted to read though, because I think that we should see some buying today with the options expiration and all of that. But I don't know about after that. CTA just bought the most US stocks in a 10-day period on record, but the party is ending. Yeah, see, I'm a little concerned about that. Dum-ba-dum-ba-dum-dum. The memo on hard landing hasn't reached the stock market yet. It's kind of funny, like just as the stock market decides that we're getting the soft landing and it's happening, all of the skeptics double down. Okay, this one's a premium article, so I'm not gonna read it out loud. So just give me a moment. $5 billion of buyback VWAP buy orders every day until December 8th. Oh, wow. Over the last 10 days, CTAs have bought nearly 70 billion of US equities. Holy crap. Are the CTAs just getting too big? You think that TLT should be selling today? Well, I tried to take a contract off. Oh, actually, no. I bought a contract in trying to just take a tick. That's what it was. Yeah. Okay, we're... Okay. So it kind of looks to me like some of the flows that we've been saying should be positive going into the year end may actually flip around sometime around the first week of December. And that's, like the big thing that will be driving us in the next little bit will be stock buybacks. But then after that exhausts itself, the flows may be to the downside because the CTAs are have just all gone long very quickly. So I'm starting to detect a little bit of it seems like CTAs have gotten too strong, right? Like they have too much money now. It's moving the market so much that they're starting to get in their own way. Once the market is moving mostly on CTAs, the edge in being a CTA is degraded. Or at least, that's my theory. I think it might be a while before either of these two orders gets filled. Oh, dude, I haven't watched that yet. I remember seeing it on a... Let me go find that. What I did see was Biden turns right afterwards, turns and calls Xi a dictator, right? This is like, what? Oh man, yeah, you're right. He's like, as soon as they ask the question, Blinken's like, oh man, that's not what he's supposed to say. He's just undoing all my work. That's so funny. I don't know if I find it that funny. You know what, though? It's like, do you like The Office? Because I'm not really into The Office. Like, okay, Mr. Bean, that's effing hilarious stuff, okay? But like The Office, where it's like somebody's doing something and you should feel social embarrassment for them and people think that that's funny. I don't think it's that funny. But he's clearly there like, yeah, you're undoing all my work. Yeah. Okay, well, treasuries are kind of selling here a little bit more. Well, I don't think that sell should be anything too big of a deal right now. But if they're reacting to that housing starts number, I find that a little curious. But let's see if they pull something out. It's funny that he couldn't. Well, he probably wasn't trying to hide it. He probably wasn't even thinking about that. I mean, you want funny, man. Did you see the whole shut the door thing? Shut the effing door with Jerome Powell? Holy crap. Right? You just don't think about those sorts of things, right? He's on a mic, but he doesn't think about, he had clearly, he was flustered and he just completely forgot where he was and what he was doing. And I thought it was hilarious. Just shut the effing door. That him reacting that way to the most powerful man in the world is pretty. I don't find it funny. I find it alarming. like here's the thing. Okay. The US-China relationship has been pretty strained. Biden has not just let China off the hook. And I think that China kind of thought that if we can get anybody else in there other than Trump, and then, we'll pay off all of the politicians and then everything will be cool again. And they'll let us get away with everything, right? But then Joe Biden came in, and Joe Biden didn't rescind anything, didn't let them get away with anything. If Joe Biden is a paid China shill, he's a really crappy paid China shill because he's not helping them, right? So then they have this summit to try and sort things out. And then China kind of says, okay, you're a country too. And we understand that you're not going to let us get away with just stupid crap. So we'll stop the fentanyl thing and all that sort of stuff, right? We'll give you the pandas back. Then Joe Biden turns around and says this crap, right? So pandas is like the key tell, right? So if China all of a sudden decides, actually, we've decided we're not going to give you the pandas, then you know that China was really bothered by that, right? Otherwise, we just forget about it. Forget it ever happened. Okay, well, Treasury's pushing a little bit lower there now, breaking out of the bottom of the range. You missed your entry by a tick? Well, if I hadn't taken this entry, I don't know where my break even was, but I think that if we get back to my break even, I double down again, right? Continue doing the degenerates thing. So in Discord, somebody posted a chart of orange juice and was wondering what was going on with orange juice. And Smitty, is a new guy in here. He's liking him so far. He cites citrus disease, probably is the reason. But somebody else came in and said, I drank it all. Why do I love the stupidest jokes like that? Oh my gosh. It's not funny haha, but funny holy shit. Well, I'm telling you guys, Joe Biden has his handlers and he doesn't like the handlers. Joe Biden wishes that he could just get rid of the handlers and say whatever he wants. Right? This is the funny thing. This is the ultimate irony. Okay? Is that Joe Biden hates Donald Trump so much. He basically did the whole thing running against Donald Trump. And I don't think that it was just like a campaign strategy. I think he genuinely hates Donald Trump. And now that Joe Biden is president, he wishes he was Donald Trump. Isn't that so ironic? He wishes that he had the balls, like Donald Trump, to just say whatever he wants and tell his handlers to go to hell and all of this sort of stuff. And apparently Joe Biden does have the gumption to every once in a while break out and say the thing that he wants to say, but then every time he does it, it ends up being a complete disaster for his campaign. Whereas when it was Donald Trump, it was like he'd say the thing, everybody would be shocked, and then it would help him, right? Not until the second lame duck term. I tell you what, this is one thing about American politics right now that is kind of funny to me, because this is a lame duck term. Like, literally nothing has happened this term. They have not passed any bills. Joe Biden can't do squat. It is just the political situation and everything is such that nobody can get anything done. And all of the politicians are still out there pretending that they matter. So this is why you get things like, you go on the House, I think it was Chip Roy that was like, what is one thing that I can go back to my constituents and tell them that I did this year? Nothing. We haven't done anything. All we did was elect a new speaker, and now we have a new speaker and we're not going to do anything. Well, yeah, that's exactly because the Republicans, the last term, sold you out. The last term came in and made a deal on the budget and did the budget for you, even though they didn't really do the budget, but they basically did a continuing resolution sort of a thing that funds them through the term, and they never get a chance to do a budget. Like that's literally what it is. And they can't do anything. And so everything that you're seeing in Washington is all just posturing and politicians trying to get reelected, but like nothing's going to happen. The new speaker came out of nowhere. Yeah, well, the whole thing with like, well, first of all, I was a little bit shocked when they just got rid of the speaker. But you know what? I was never a huge fan of Kevin McCarthy. Like, this is where it's like, okay, yeah, he's been in there for a long time. He did do a good job as whip and everything like that. But did he do a good job on policy? Did he do a good job on the political strategy? No, like, he didn't accomplish anything. But then Steve Scalise came in, and everybody said that they liked Steve Scalise, but I was really surprised that he wasn't able to garner enough votes. So then this guy that nobody's ever heard of before, he comes out. Because I was getting a little bit excited because I really like Chip Roy. And I thought, well, maybe somebody will convince Chip Roy to be. So anytime that you hear the Republicans, I guess they're not really talking about it anymore because it's already done and over with. But when you heard Republicans talking like, we need to have somebody run that doesn't want to do it sort of a thing, I think they were talking about Chip Roy. I think Chip Roy is the guy that is the leader that everybody says should stand up and be the leader and doesn't want to do it. And who would blame him? Because like anybody that you put in there just becomes the target and they destroy. Like you saw how when they got the new speaker in there, how hard the media immediately went after him, right? It was like a mad scramble to find everything bad we can about him to make the Republicans look bad. It's really quite disgusting. They're getting paid six figures at the taxpayers' expense, and none of you are holding them to account. Well, but that's the thing. Is like, what am I gonna do? Okay, so like, am I gonna go and tell Mike Lee like, oh well, because you were in a divided Congress and you wasn't able to get anything done this term, I need to vote you out and replace you with somebody else. And who am I gonna replace him with? Okay, like, Like, the bench ain't that deep, guys. That's in the Republican Party. The bench ain't that deep. Who are you going to replace him with? It's just some unknown person, right? And all for what? Because of a political situation that's outside of his control, right? Like, the problem is some of the rules need to be changed. I think that the Republicans have taken a few steps in the right direction because they've made it a little bit easier for people to bring things to the floor and bring bills ahead. Probably they need to have a rule that, like, I think that there needs to be a one issue bill rule, which means that I cannot make a bill about healthcare and then add in funding for a bridge over here in that bill, right? They get rid of that. That would probably help. That would probably help the logjam to some extent, but doesn't matter that he's from the Tea Party. That's my representative, right? And I have to use Mike Lee as the example because I'm okay with Mike Lee staying in there. I would really like Mitt Romney to be gone, and it sounds like that he's not going to run this time, so. It's because most of the decent people with conservative views aren't dabbling in politics, and that's true all over the world. It's true. Oh, don't worry. I'm sure that they get plenty of constituents asking them questions. No, I think what Jiwi is saying there is true. We have a cultural problem in politics that is because we are basically anti-government everything. We have no interest in studying and understanding the government. And ergo, we don't have very good, solid people in government, right? You're a conservative, and you have the chance to either A, work for Goldman Sachs, or B, work for the government. Which one are you going to go to, right? You're going to go to whatever is not the government every time because you hate the government. You hate the way the government bureaucracy works, and you think that if you go and you work for the government, that you'll hate it. So what happens? Everybody in the agencies that work for the government, from the FBI all the way to the Environmental Protection Agency, are all liberals now. And then you get the deep state, and Republicans complain about the deep state. Well, it's because you abdicated government jobs. You let them take them. Yeah. My lag. What is with this thing? Like, okay, can I tell you? I'm gonna get into something that's a little spicy. Okay. Republicans, as of late, or let's say traditionalists, right? They're all saying, go and get yourself a cabin in the woods and just live off of the land, right? That's what all of the traditional kind of like pro-trad, that's what they call them. Not pro-trad, but just trad wives, trad whatevers. They all want to go out and live in the country and just live on a farm on their own, off-grid sort of a thing. Why is that, right? Like, why can't I be traditional, but like be traditional suburb, right? The 50s weren't so bad, were they? Well, the academic explanation for this is kind of a little disconcerting because, generally speaking, this is going all the way back to like Roman times. The political movements that tend to be genocidal are almost always blood and soil kinds. So they idolize farming and living off the land. And they say there's these people that are doing, that are messing the land up or, shouldn't be there. And we need to kick them out so that we can use the land for its real purpose. right? Like that's how the United States justified expanding all the way to the West Coast. This is blood and soil. It was we're destined to take it over. And who were the people that were moving over there, moving west? They were all people that wanted to live off the land and live on farms. And yeah, they genocided the Indians. That's what happened. So I'm always a little bit nervous when everybody starts talking about running to the hills and living off of I don't want to do that. No, I don't want to do that. I want to get a sporty car and, you know, drive around the mountains from time to time and go camping, but I want to live in the suburb where the grocery store is around the corner and I can go to the mall is only 15 minutes away. Like, okay, call him Maharaj. Be like the new speaker, say you don't have a savings and you're of modest means. That one is kind of bothers me because like I don't 100% know what the thresholds are, but like, is this guy not contributing to a 401k? Right? So it kind of concerns me that this is maybe not a very financially literate guy. Oh, run for your life. Are you talking about that guy from The Walking Dead? When he's like, when you do this, you risk your life. You risk your life. You know, this little excursion down here is looking pretty rough. How much in Delta is it now? 15K? Should I just bail on this swing? I'm kind of considering it. You don't need savings when the taxpayer pays for everything. You should have a 401k, guys. I guess if you don't get an employer match, you put it into the IRA, but like you got to put money away. And I get that maybe this guy has not really come from massive wealth and has only been in Congress relatively recently, but like since he's been in Congress, he should be doing those things. So it kind of sounds to me like there might be some education that he needs. So if the speaker is out there listening, you know, I would be more than happy to discuss with you and talk about your financial situation and what you might need to do. We don't need to do any of this nonsense with the work that Congress does where, you know, you're basically making money off the position and doing insider trading or any of that, because that's a conflict of interest and I don't think it's very moral. Even though if I was a congressman, I'd totally do it. But you do need to be putting stuff into like an index fund for when you retire and stuff. And we need to make that happen for you. So I can't even remember the guy's name. Can any of you guys remember his name? Johnson. Speaker Johnson. How Speaker Johnson's honeymoon ends as hardline Republicans rebel. Okay, so now this one is also interesting. Was that McCarthy was going to make a deal with Democrats, and that pissed everybody off so much. They went through this whole big process until they found somebody that was really conservative and everybody could agree with. And what did he do? He made the deal with Democrats to just do a continuing resolution. Did the same thing. But I'm going to give him a pass, because at that point, how do you put together a good bill and negotiate and everything, right? I think that you do exactly what he did. Push it off until January and use that time to actually come up with a real plan. To actually have like a real bill, the things that you're wanting for and trying to negotiate for. And then if you do that and he caves, then like, what even is the point? I think he meant nothing in savings. Well, no, that's where I'm saying the whole thing is that the Congress are required to like disclose certain things, and I'm not 100% sure the details of what they have to disclose and what they don't. But my understanding was that if he had a 401k or an IRA somewhere, that would have been disclosed, and it's not, suggesting that he's not even saving. It suggests that he's like many Americans, that they felt like money was so tight that they couldn't afford to save, right? To which I say, listen, if you can't afford it now, you're definitely not going to be able to afford it when you're 65. That's the only sane thing to do. I distrust any office holder who doesn't do it, talking about where he trades and speculates. I don't distrust any public office holder who doesn't do it when the rules allow them. Well, I don't feel like we can really trust any congressperson that does do it. So I guess the conclusion here is you just shouldn't trust congressmen, right? Is a huge conflict of interest, right? You come in, you see what's going on a committee. You say, I think that this is going to pass, so you go and you buy it, right? So now you're definitely going to vote in favor of it because you're going to make a ton of money if it passes. And then other information comes out later on that tells you, oh, you know what? This is actually a bad idea. But then you vote for it anyways because you're going to make money, right? It's not. It's a conflict of interest. It shouldn't be allowed. Shouldn't be allowed. It makes the grift public. Yeah. I mean, there is something to be said that, okay, in American politics, money speaks. You as a, especially if you were running for, say, president, and you come out and you want to do things that would be against the interests of basically every businessman in the country, or let's say more than 50% of the economy, right? If you wanted to do something that was like, let's just destroy 50% of the economy, right? You're not going to be elected as president. Even if you have like a really good ideological reason and like a big movement behind you to make this thing, it's not going to happen because the money speaks and the money stops you. That is a feature of American politics, okay? In American politics, the money speaks, and it's very, very difficult to do something that would be unprofitable. And so the economy continues to chug along and do well because of that. In some countries where, it's only one guy's interest, right? Those always just become dictatorships. But because of the way that it happens in America, we get a real democracy. Well, representative democracy, let's say, right? So it's good that money talks, right? But I kind of think that it's gone too far, right? What has happened with the advent of the internet and everything is that senators no longer really seem to have the leeway to make correct decisions, right? It used to be that you get elected to Congress, you study the issue and all of that sort of stuff, and you determine, okay, this is the thing that would be the best for the country. And your constituents may not understand that, but they wouldn't even know that stuff is going on, right? Now, the internet and everybody has an opinion, and so you basically have to go along with their opinion. And then you've got all of these people manipulating opinion with money, with advertising and all of that sort of stuff. And so the ability for a congressman to come in and understand the issue and make the correct choice is severely diminished. They just have too many perverse incentives distorting their analysis and pushing them in a different direction. So that's another issue for sure, right? But that's where I say I think the first issue that you got to deal with is like this logjam, right? Force bills to be one issue. That would probably solve a lot of that. Don't spend energy on politics? Well, we got to understand it. I'm not going to run for office, I tell you that. I thought when I was in high school, I thought maybe that's what I would do. I don't think that I ever was like, I want to go into politics. I was always going to be a computer scientist, right? But once I started to realize that the power that data had in politics, right? I was like, oh, I could work for campaigns doing data analytics and stuff like that, right? And then I realized that the ones with the real power were the ones that were deciding who gets loans. So I went and did that. I think I've probably heard that song, the Iron Maiden song you're talking about. I can't think of it at the moment. But I'm sure if I hear like even the first note, I'll be like, oh, yeah, I know that. I know that song. Okay, getting a strong bounce here now. That really came back quick, in fact. Soon you'll have... Nah, I don't think that we're going to get digital dollars like that in the United States. I could be wrong, but... I think that you will probably get better payment systems. Better digital... Because technically the dollar is already digitized, right? But this whole idea of like... a government-run cryptocurrency, I don't think that it's going to happen in the United States. Too many people opposed to it. It's kind of funny because the pro-Bitcoin people hate it, right? The real reason the pro-Bitcoin people hate it is because that would destroy all utility to cryptocurrencies if there was a crypto dollar. Of course, I think it would still be a speculation vehicle, but you know, especially if you own Tether, right? If you own Tether, you don't want the United States to make its own cryptocurrency, right? You want them to turn Tether into that dollar. So I think that's why you see a lot of the stuff that there is. And of course, there's like people, they want it investigated, but there's laws about like whether you can and cannot have it and stuff like that. Like, I really don't think that they would be able to get the law to the place where they would actually be able to do that. Oh, you know, I missed something else here because actually I said you don't get power with ethics. That's true. I'd say that most of the people that get to, especially when you get to like president, that you've probably done some questionable things. That's why America was basically set up to incentivize people, right? Like, I think that many conservatives seem to think that if we just get the right, maybe it's not a conservative thing overall, but definitely like Mormon people, okay? We're taught to believe if you just get righteous leaders, they'll make good decisions and everything will be okay. right? Because the Book of Mormon talks about that a lot, about having righteous leaders, and when your leaders are unrighteous, then that's when real problems really begin. But I say that the way that the United States has been set up is it kind of assumes that people will do bad, unrighteous things, let's say, and it basically just sets the system up to incentivize them to do the right things, right? So it is kind of like a thing that, like, if there's a strong incentive for a senator to do a certain thing, maybe it's not a bad policy per se. But there are, of course, edge cases. I mean, that could be like a general thing, but the problem is that it's the issues that don't fit into that box that seem to be causing problems right now. And that's where I say in the past, this has always happened, but senators would know how to make the right decision and work together to make something happen. And in the age of the internet, we seem to have lost that ability. Well, I'm starting to... I'm not sure what to think of this now, guys, because... Well, so for one thing, they didn't fill my order at 45.40, so you can't see my position over here, which is a little frustrating. And they're still kind of on the downturn in the mini, so I will leave that one alone for now. But the treasuries came down here since the news pretty aggressively. It really looks to me like the liquidity in the treasury is just really bad, because that's really far to move on like only 1,500 contracts. I mean, that's like a decent move. That shouldn't be a freaking like 10 20 tick winner. How big it actually is it? 25 to 0.25. So 7, 9, yeah, it's almost basically 20 tick range on 15,000 contracts. This is a little extreme. But now, like, we bounced really hard. I am seeing some flow the other direction. And it came, like, right in after the meta order. So I am kind of seeing some things that... kind of suggests to me that this is like a good trade to make. Hold on. Don't go out and buy it yet. Okay. I'm seeing a situation where we could get the inverse sine law, except for that the volume is kind of like trailed off and could turn back down again. So I'm not really confident about it. A little bit of sign of them pushing back against this, and that this could unwind though. So I'm a little torn. For some reason, I don't feel the strong desire to trade it though. What do you think of sciences that are not using advanced math? I don't think there should be sciences at least in the same levels as math-based sciences. Right. Okay. So I think that some of the quote-unquote social sciences have been given a bad rap lately, because it's not that doing science in those fields is not legitimate. It's that most of the practitioners in that field do not understand the math well enough to really be doing the research that they're doing. So they're basically p-hacking. Nassim Taleb talks about this a lot, where you go in and you get this data set, and then you just kind of try things until you get something that does what you want it to do. And then you'll end up exaggerating a statistical anomaly, and then coming in and saying like it's statistically significant. But really what's happened is that you've compounded so many factors on top of each other trying to get the answer that you want, that your math isn't sophisticated enough to deal with that, because every time that you add one of those, like, the error goes up, just like the whole fat-tailed thing. So that's why you get so many psychology and sociology studies where they can't replicate them. So somebody comes out with a result that everybody makes a big deal about it, and then somebody else tries it and they can't replicate it. And that's happening a lot. So then a lot of people will turn around and they'll say, economics isn't a real science. Well, it is. But you got to understand that it's a data science, right? Which is to say, when you go and you look at physics, or at least basic physics, you know, Newton's laws are pretty straightforward. These are like, many cases, like linear equations that anybody with a high school education can understand. But once you start to get into higher level math, and then you have to start getting into things like, you know, the statistical calculus and the Gaussian distributions and these sorts of things, right? It's like really, really super complicated. And economics is in that space, right? Like, a lot of the stuff that we've gotten from economics are like that. The thing that I find really wild, there's a lot of people that are like pro-Austrian economics, okay? And you gotta understand that Austrian economics is not really economics, at least not in the way that I think of economics, right? Because I think of economics as the scientific study of the economy. And Austrian economics is basically like, or let me rephrase. I think that economics is the scientific empirical study of the economy and markets. But the Austrian economists, their claim is basically you can't study it empirically, right? So in my opinion, they're not actually economics. They're like ecolosophy, right? It's like economic philosophy, because everything that they think about the economy in Austrian economics is based on logic. They say, here's a model, and I think that people act like this. I think that people are rational actors, ergo they'll do this, right? And the problem is they have faulty assumptions set there. One primary one being that every actor in the economy are rational actors. They're not, right? So they come up with conclusions that are total nonsense, right? But I find it kind of weird that it's the people that are saying, oh, these social sciences aren't real science, but then they like Austrian economics too. It's like, okay. So the guys out there that are trying to do empirical study and use real math and real science, you dismiss, and you just go for the people that are coming up with philosophical theories about the market instead. Okay. I think it's a tough issue though, because you know, like Keynesian economics, okay, that was like a huge step forward, okay? So again, this is not like linear equations per se, or rather it's stuff that I think is a little bit beyond what most people's education is. And you really got to take like an economics course and everything to kind of like understand everything about Keynesian economics. Because these are things that, you know, it took hundreds of years before somebody had the idea and figured out, right? So you kind of got a bunch of people not working with the full picture, right? And then on top of that, we have cultural ideas about the economy that kind of contradict the data, essentially, at this point. That's why I want to get some of this stuff out there. One of the ideas that we have, particularly among right and libertarian leaning people, is that the market is perfectly efficient. And we know that that's not true at all. That's how libertarians justify is like, well, whatever the market does, that was the correct thing because the market is perfectly efficient. But it's not perfectly efficient. It just does what the orders are doing. You can have one guy can control the whole outcomes in some instances. They just, happen to buy at the right time and all of this sort of stuff. And that chose the outcome. It's not perfectly efficient. Maybe over like a 5-year time frame, it's pretty efficient. But especially in short time frames, it's not very efficient at all. And to base all of our decisions based off of that, to say, well, the market did what it did today, so that must mean that it's correct. It's kind of like the market is some sort of crystal ball or something is ridiculous. So this is why you get these people out there on social media saying that like economics isn't real. It's because they don't understand what they're talking about. They don't actually understand that they're not sophisticated enough to understand the science about it. And they probably don't know the most recent science. But I think that there's some really big advantages in knowing the most recent science. Well, we did see some icebergs in here. I think I might try it. I'm already a little bit late. Well, so if you look at like market efficiency on a long run, like a period of 5 years or more, then I would say that the market is pretty efficient. But the whole thing is how many decisions and so forth have been made in that 5-year time period, right? Okay. Interesting. I don't think I like that. So I was testing the market a little bit there with my order, and the spread kind of has come in here at 44. So let me give you an example of why this matters. A lot of people say housing is too expensive. This is unsustainable. There's going to be a market crash in the real estate market. And there's actually a pretty strong group of people out there that believe this. Like there's subreddits and like an internet subculture around this specific issue. And the problem with that is that the market is not informationally efficient. So they say it has to come back, right? Well, no, it doesn't. Well, all that matters is what the orders do. And as long as interest rates are really, really high, not a whole lot of people can afford to buy a house. And then if the interest rates decline, there will be a lot of people that will be jumping at trying to buy a house, even if we're going into a recession, frankly, because there's still going to be people on the upper end of the scale that are going to buy them. Well, we took a swing trade in the ES, yes. I actually have a swing position on from like 45.20, I believe, but Jigsaw hasn't loaded the position, and it's not filling my order at 45.40. But I'm basically long 2 contracts from 45.20. And I'll close it out the end of today, before the end of today, let's say. So they tick down there, and then somebody's hitting into 439 a lot. I think they might go up, but the problem is I don't think I really want to get the position from 435. In fact, I'm not sure that 44 is good. 445 would have been better, just because of like where it is within this range here. Because I'm seeing a little bit of signs of liquidity hole sort of behavior. I think it will take 27 years for the housing market to crash. Too many people have really low interest mortgages. Yeah. Which is to say, so like some people think that it will play out like 2008 again, and it won't. Because in 2008, you had a ton of people that had multiple mortgages, were like way crazy over leveraged and all this silly stuff, and at relatively high interest rates. And then when everything went like kaput, you know, like they had adjustable rate mortgages and stuff. So like when the value of their house was going down, they were just destroyed, right? Now what you have is you have all these people like myself, frankly, that basically have a 0% interest rate. Well, okay, it's like 2%, right? 2% interest rate, and already a ton of profit built into the house, right? Like my house would have to lose like probably 60 or 70% of its value to squeeze me, right? So you're not going to have that huge flood of sellers like you did in 2008. It's just not going to happen. Yeah, I think that the art of speculation does bring positive value for society. There has to be, so if the market is not, I think that this idea is again born from a false premise, which is that the market is perfectly efficient. If the market is perfectly efficient, then it doesn't matter what individual people in the market are doing. We don't need people that are speculating or doing whatever else, because the market will figure it out on its own just from people doing regular business. But we know that that's not true. And so because of that, you need people that know what's going on. You need people to be able to come in and say, you know, this is unsustainable. This is too high. This doesn't make sense, or whatever the deal is. Because if they don't do it, nobody will, and the market won't make that move. So yes, you need speculators in a market. And it's important for us to become as informed as we can to, you know, try and help the market in that respect. Well, there's 28 or 28. See, I was putting orders at 440 and they scared me out, man. That's kind of weird. But the E-mini's looking a little sad. Ah. So the value that we generate is bringing stability to the market? No, I didn't say that. So this is something that I was reading. Okay, so if you take the Series 3 and they'll ask you about that, right? That's one of the things that's in the study materials, at least, is that speculators bring more liquidity and make a market more stable. But that's not strictly true, right? Because we know that all orders have impact, and anybody that's coming in and taking from market liquidity, hitting in with market orders, is going to increase volatility, right? So speculators do not strictly reduce market volatility. But in order to have a stable market, you do need speculators. So There you go. Speculators bring accountability, not stability, and speculators provide a buffer against geographic risk. There you go. You have to have them. They are valuable. I vehemently disagree with this liberal narrative that trading is worthless to society, and that like we should ban speculation. So there are some people that think that they should ban speculation. Because basically what happens is you're told that the market is perfectly efficient. So then you go and you make decisions based on that efficiency. And then you discover that the market is not efficient and the market is not doing what you think that it should. And so then you say, it's those darn speculators pushing the market against me and screwing that perfect market efficiency up. When the reality is that efficiency was never, on a short time frame, was never there to begin with. Market prices are purely a reflection of the orders that go into it, which means it's supply and demand, but it's like it's a two-way auction. It's buy supply and demand and sell supply and demand, and how those interact with each other that determine prices. I think that what we do is a very important thing. Like, look, who's gonna effing do it? You can't just let the whole thing be run by robots, guys. So it seems like there are some people in society that's what they think should happen. Everything should just be run by robots. The robots can trade, and the people that own the robots can make all of the money. And nah, that won't work. That's a bad idea. The robots don't actually understand what they're doing. They don't actually understand what's going on. They're just fast. You need people that are speculators and are good at it. And yeah, there can only be so many of them. So it's kind of a rough job to take on. But somebody has to do it. And I think that here in our day, we've been provided an amazing opportunity to be able to get involved in doing that for super cheap. Because you can basically, for about $2,000 to $3,000, I think you could get a really decent start in futures that will allow you to trade micro treasury yield futures for several years and have a chance at figuring it out. Things that, would have required tens of thousands of dollars in the past. So I think that we have an amazing opportunity and that we should take advantage of it if we enjoy it. Because it's kind of a thankless job for many of us. Not everybody has success. There's studies showing that short-term speculation reduces volatility in the market. Moving volatility comes from long-term investors. Well, that's where I was saying, like, what causes volatility is market orders overwhelming limit orders, right? So I think it's overly simplistic to say that this one group of traders creates stability or doesn't. Right. Like that's what's happening in economics right now, is that we're realizing that a lot of the paradigms that we created in like the 1800s and 1900s are not actually that useful to practical application of the market today. The typical approach was that there was fundamentals and technicals, and that the market should be fundamentally efficient with some amount of noise. This is like the weak form efficient market hypothesis, which is like market is efficient, but you might be able to make money from trends or something like that, right? But then when we really get into it, we realize that, well, no, it's just what the orders. It's just orders. It's just orders, and it kind of doesn't matter whether, like, what the fundamentals are or what the technicals are. All that matters is what is causing those orders to be traded right now, which doesn't fit into the neat little boxes that we had set out. Well, they came back. It was touching 440 for a moment, but it kind of bounced. I'm seeing it's actually trading in a pretty wide range with not a lot of volume coming through here. So I'm a little bit nervous about that. I am seeing a little bit of Japanese yen correlation and dollar correlation, but not entirely sure what's going on here. And yeah, the S&P 500 is pushing back. They could make it to that 40. Do you think that they'll make it to that 4,500 again today? I'm really mad that they didn't fill my order at 45.40. What about, or were we talking about geographical? Oh wait, you guys said a ton of stuff here. Wouldn't geographic risk mean like there's a possibility that there could be a war in a certain country and, you know, that could harm the economy? But because there's traders out there trading that kind of, you know, is a little bit of a buffer, because there are some people already hedging about it. Yeah, that speculators carry risk that others don't want to carry or be exposed to. Exactly. If there weren't speculators, then who would hold their risk? Does it just be market makers? I guess. But I think that would make it really, really difficult for both the market makers and the hedgers to really do their thing. There weren't other people coming into the market with other, right? It's all of these different people coming together that all have different ideas and different incentives and different goals that allow you to actually have like free trade, to have a lot of people to be able to execute where you want to. Because if it was only one group of people in the market, like if there were only hedgers, then just all of the hedgers would want to hedge a certain way and there wouldn't be anybody to trade into them. This is being a little sketchy. The S&P 500 is selling really hard. Should I think anything of that? Okay, we're about to get Schoolsby speaking. I think so. This treasury one, I think I kind of want to take that off before the end of the day. But this E-mini one, I kind of want to see what happens on Monday. I think that 4,500, we might get pinned to 4,500, right? That might be why the equity market is selling down so hard here at the beginning. It just seems to me that the benefits we bring have more layers of abstraction than, say, owning a company and selling stuff. Well, I don't know if it's layers of abstraction. I think the thing is that for us as a retail trader sitting at home, it is kind of hard to see these things, right? Because you just may not see any reward for what you're doing. I think it's very different when you work at a bank and you can directly see how these things go and how the business and the economy works, right? Like once you realize that all of these things that you kind of thought are just kind of like silly things that only exist for people to make money, and you realize that they're a key part of the market that, you know, provide services that people need, and that you basically wouldn't have an economy without them, then, you know, it really changes your view on it. You know, when that's why, again, when you remember we were talking yesterday about like Goldman is like a cult. Part of that is because the people that work there, they can see the mission being carried out. They can see how the transactions that they are a part of directly fund people to do business, and that without that function, you wouldn't have an economy. And they believe that what they do there at the bank is important and valuable. And I believe it. I think that it's one of the most valuable things that we do as part of a modern society. Like, this is what I've been telling you guys the whole time, right? Is like, I went into government, or I was interested in politics, and once I started to get involved in the politics, I realized that actually the really important stuff decisions were being made at the banks. That what were they doing to decide who gets which businesses get a loan and which ones don't? What were they doing to hedge themselves against risk and protect themselves against things like 2008 and stuff like that? And I realized, oh, you really need smart people there, because it's a complicated thing. And if you don't, then, you know, stuff like 2008 just happens again. It was always very, very startling to me to see all these people be like, 2008 sucked. That means that we shouldn't have people in banking. Like, they shouldn't pay people so much in banking. We need them in government and stuff like that. And it's like, no, it's like you want the smart people to work in banking. I promise. It's very important. Maybe sometimes you're insulated from your decisions, but I always felt when I worked there that the things that I was doing was important, you know? But again, like, I can see it directly. I think that they did a good job of showing you how what you were doing was important. So, you know, we did risk controls. There was an incident where, like, there was somebody deployed something wrong, and it threw like $35 million out into the market and screwed the whole market up for a day because of this one handler that somebody deployed incorrectly. And I created systems as a failsafe so that when things like that happen, we would detect it and it wouldn't go out, right? So we improved the safety of the overall system just by what we were doing in the technology group at a big bank. And I think that if you were a big speculator, you know, if you were one of the movers and shakers in the market, you would definitely see it. You would definitely realize how the decisions that you were making determine what the price is. Sure. The idea for me in my mind is that as a speculator, my main business is risk, and it's all about that, how much you take or are exposed to. Okay. But like, a lot of what you're doing as speculation is understanding the market and using that to inform your decisions, right? Yeah, it does. 35 million is just a drunk mistake that happens every day. Yeah. So I'm told that they did one. I think I can explain this one to you because this happened before I worked there, and I think it's pretty simple. So one of the things that a lot of trading systems do is they use sequence numbers for security. So basically, the two systems keep a number, and if the other system doesn't respond with the correct number, then you know that something's wrong, that like a message didn't make it or whatever, and so it needs to be resent. And so somebody deployed something and it reset the sequence number back to 0, because you're supposed to save that sequence number and then replace it after the deployment. They didn't do that. So then that handler basically replayed 3 months worth of trade. Right? But that was the one that happened when I was there. Was basically there was a property that was set in there for testing, and that property was accidentally set on a production machine, and so it was routing the orders wrong. And that day, it was like on CNBC and everything. They're like, well, what's all going on with the market? Why is it doing all this stuff? This is kind of weird. And they're like, I think there's a problem with Goldman. Yeah, there was. There was. And I knew the guy that did that. He had to get like legal representation, all this shit. It was crazy. It was crazy. And yeah, it severely affected the market that day. I don't know how much they lost, because I think that a lot of those orders just get like rejected. But people definitely noticed, let's say. So I'm not sure how I feel about this coming in. So we did this thing where we moved up pretty good, and then we came down really quickly and formed new lows. And I'm not really seeing a super strong change in the cumulative delta in the 10-year. Now in the 5-year, it's all sell. And I guess I could even say in the 30-year that there was selling. But I was kind of looking to buy it again here, right? And this is really bringing that strategy into question. Did you have a trader go rogue at where you worked? No, because my systems worked and were good. If anybody had even thought about trying that, we would have caught him. We didn't have the problem that JP Morgan did with the London whale and all that sort of shit. No, it's true. It was kind of funny because we were, like we did some risk management stuff, and most of the time we were being asked to, adjust the limits that had been placed on there so that they could do special trades and stuff. So we never had an instance where somebody tried to do something they weren't supposed to. Now, we did have instances where algorithms went crazy, right? So I remember, do you remember when Citadel went bad? This was like, I want to say this was like 2014, 2015. And there was a problem at Citadel, and one of their systems was going haywire and just sending lots of orders out and all that sort of stuff, right? And if we were their broker, those wouldn't have gone to market because our systems catch those. And we caught, some hedge funds having problems of that nature many times and saved them money. Yeah. It was kind of cool. It was kind of cool. The systems, they worked. They were really good. I guess with the London whale thing, JP Morgan had some systems like that, but the problem was that the whale kind of wrote them and knew how to bypass them. So I would not have been able to bypass those sorts of things. We had security in there so that even us who built the system couldn't get in. It was kind of interesting, right? It was like, because everything is infrastructure as code, like only the system processes have the ability to get on the boxes and do anything. So I wouldn't have been able to do any of the stuff that the London whale did. Yeah. basically where I worked, they had already long before that taken the measures of, and it wasn't because they thought that somebody would do something like the London Trader, but just that they thought that somebody would see a problem, go on the box and change it, and then screw it up and whatnot. And so they basically had it set up so that the only way you could do anything was if you put in, you submitted code and it got reviewed by 2 or 3 people and all this stuff. And then the automated processes would do it all. And you would need special permission to get on a box. And you wouldn't be able to do it with your personal credentials. It was like this temporary lease that you'd be given. Nice sell, making the 90 calls worthless, you say? I think you might be right. It may be options that's going on here. The market does seem to be moving based on the dollar as well. When the dollar started to recover and came back above 104 there, you saw that was when the treasuries sold. But it really looks to me like the treasury liquidity is really bad. Like it's moving on hardly anything. So for me, a super small speculator, that makes things kind of tough, huh? Yes, I see TLT is at 89.92 right now. So that may have been somebody selling it to try and ensure that TLT stays below 90.10. I guess it's fun to think about when I worked at the bank. But the point that I made was that even though I was in tech, what we did there had a significant impact. It was a valuable thing for the economy. And we made systems safer. We prevented, rogue robots going haywire and all this sort of stuff. It was and I think that they did a good job at showing everybody how what they were doing was important to the company and to the economy as a whole and everything. And yeah, I try to turn around and help you guys realize that too, because like honestly, it's really effing hard to trade, right? The people that are going to trade and are going to make it are going to be the people that just intrinsically enjoy it, right? Which probably means you're maybe a little bit autistic or you're just kind of weird to have an interest in that sort of a thing, right? A lot of people will get interested in it because it's money, but then when they find out how hard it is to make money and that they're unlikely to do it, then they're not interested in it, right? So if you're one of those people that are interested in it, like those are the people that we need. That's really valuable to the economy, even if you're just trading micro contracts, because who else is going to do it, right? And I feel it's really important for me to help you guys understand, those of you that have decided to take on that you're, even if you don't make money, that your efforts are not in vain, that every order has an impact. It's a chaotic system. One order can make all the difference. Yep, it's a cult and I'm still indoctrinated. Yep. 100%. 100%. I mean, I guess a large part of what I'm saying is like the economy as a whole, the market is a pretty decent system. The system that's broken right now is the political system. And what happens is the politicians spend all their time trying to convince you that it's the bankers that are at fault for everything, when it's really that these politicians can't get their heads out of their butt to understand the systems they're dealing with enough to actually make good laws. That's really the deeper philosophical takeaway I'm trying to teach people, right? Politicians suck, and the economy is like the best thing that we got right now, even for all of its flaws. And that brings you to point number 2, which is you kind of have to embrace the imperfection, right? Like, I think one of the things, I think it was C.S. Lewis, because C.S. Lewis wrote some of the best Christian literature and stuff, right? Yeah, but he started out as an atheist. He was, like, from school, he was an atheist, and then he became Christian later. And the reason that he was atheist, the thing that he believed was, God would not have created such an imperfect world, was what he said. But I say that if everything was perfect, if the market was perfectly efficient, it would be boring. Like, I don't think that perfect is really what we think it is. Like, if we say that God is perfect, I don't think that perfect as we conceptualize it is actually what the situation is. Because that would be boring. It'd be like, you know, why would you ever want to do any of the things that we enjoy in this life? Competing, sharing ideas, art, things like, you know, if there's this idea of perfection, like that there's this perfect art or something like that, this doesn't make any sense, right? I think that to some extent you kind of have to embrace the imperfect parts of life. It's just like, what do they call it? Wabi-sabi or whatever? Like, you break a vase and then you put it together with gold, right? There are things that are imperfect about this. One of the things that are imperfect about the financial system, and that is kind of the flavor of life. And we kind of have to learn to accept that things won't always go the way that we want and embrace the imperfection. Including with politics too. That's why I can still talk about politics and laugh about it and tell you, well, this is probably what they need to do, but, or at least where the problem is. Congress needs to have hearings on all the fake data put out this year. You know what, Octavius? I kind of feel like that if you did hearings, though, that we wouldn't really learn anything that we don't already know. Like, people have to do like a super deep dive into it to explain why the data comes out the way that it is. But I think we understand why the data is that way. So I don't know if hearings would do a whole lot. But the thing that I don't understand is if the data, especially non-farms, is basically useless at this point. Why has there not been any discussion about methodology changes? I don't understand. What's with that, you know? But one might even argue that imperfection is part of perfection too. Well, yeah, or what? So here's how I think about it. Okay, if you think about quantum mechanics, right? They have this whole thing where it's like a field of decisions, right? And kind of one of the things with the qubit is that you can kind of come in and you can say, well, these are like the probabilities of it turning out this way or that way. And there's like this matrix of possibilities of sorts, right? And which one happens is random. When you look at it, if you look at it at any one individual time, the answer that you get is random. But then you do it enough times and then you get this decision matrix that you use in quantum computing to actually, do your computation. So what I would say is that there is not always a correct answer, essentially. Like there are places where there is two paths or multiple paths, and all of those paths are equally valid. And what you do and what is your free choice is determining which of those paths you're going to take, and it is free will. And so if you were perfect and I were perfect, we would still make different decisions, you see? And some of those decisions will result in good things and bad things about that system that you have. But then you understand what those positives and minuses are and you manage them, essentially, right? So what I'm saying is, if all of us here in this stream were perfect, we could still have a market. We could still play baseball with each other. We could still do all of these things because we're still going to be different individuals that make different choices that are all equally valid and equally perfect. That's what I think. I know that like is like super off the rails now, but that's how I think of it. Sometimes there's not a right answer. There's multiple valid right answers. I'm really tempted here with where the treasury is at to kind of try and reverse this, but I don't think that the flow in the 5-year really justifies it. The flow in the 5 years is really against me. So I think that I can like scratch this over here for a few ticks. I'm okay with putting that bet on, but trying to go for the reversal trade here in the 10-year, I don't think I'm going for that anymore. I don't think that I want to try and sell it here either. Although we did reach the overnight low at 22, so next you'd be looking at yesterday's regular session low at 20. And let's kind of give it a little bit of time, see what its next move is, and then maybe we'll see a change in the flow so we can take advantage of. It's also, it's a no news Friday, so like taking a trade here in this last hour might not make a whole lot of sense. Although it sure seems to be a lot of more activity than you would normally see on a no news Friday. So but that must be because of options expiration, right? Oh, I didn't see Psychosis Thursday cancels. I think that would be fun. If something I said about that philosophically, people wanted to cancel me on it, I'd be like, bring it on, right? Obviously, sometimes I could certainly say something like misspeak on something, but I try to be careful. This is the thing. Whenever I see like people getting canceled, I'm always like, well, that person seemed like they were not being very careful about what they were saying. Like how can you be speaking to a public audience? What you say matters to all these people, and you be so careless about what you're telling them. It just seems so irresponsible to me. And then I'm like, am I that careless sometimes? And I just don't realize it. It must be, because so many people make those kinds of mistakes. Yeah, I'm not big enough to cancel, just like you're too small to fail. Yeah, could happen someday. Heck, one of the things was, remember, like, just when things were kind of starting to go up for us in like 2019, and then the stream got throttled for a week, like there was a strike. Now, it wasn't like YouTube didn't tell me, but YouTube shadow banned me from the search results for like a week. And then it looked like that. Actually, it must have been after COVID, right? And then eventually the YouTube admins came in and looked at it, and I guess decided that it was okay and we were allowed back on the search results again, right? But I've always kind of wondered, like, okay, so like Did that action have a lasting effect on the channel? Maybe we were canceled. Because it does, I do find it a little bit odd sometimes that I get so much praise about the content, and I really think that it's some of the best content out there, but the algorithm just doesn't push it. Especially if it's like a new topic. You know, like I try and talking about smart money concepts or price action, it doesn't send any of them to me. If we check, we see absorption at this price. I would be really careful about making too many conclusions from that, right? It's probably just a coincidence. Like, they came out with pretty aggressive selling, like, just before the open overall, and it is flipped around to buying. You know, it's just the cycles. Yesterday we talked about Fat Cat and his video started appearing as recommended. That's funny. Well, I think it does tell me, let me see here. I think I can come in here and I can go to audience. Yeah. And then I can see what my viewers are watching. Okay, so Iron Man Trading, that's good. I specifically targeted. I watched a video or two of his. Like, I liked that he was calling people out and making people question. He still believes in price action, which I think is kind of funny, but I'm basically trying to poach users from him, so that's good. Patrick Wayland? Why are you guys watching Patrick? I thought we understood that that guy was a fraud. Has called himself out, exposed himself like 3 or 4 times at this point. You still watch him? What the heck, guys? Well, okay, whatever. Some of these I'm not familiar. Tory Trades, that's new. They're like, how to hear some small channels that it's picking up on now. Oh, and I'm getting Daniel because I was kind of trying to poach from Daniel. And Axia, I mean, I like Axia, so that's good. You don't know who Patrick Wayland is? Okay, Patrick Wayland is like the oldest, most successful YouTube trader. And essentially what you would get is he'll have a video. It'll be like, yeah, it'll be like these like 10-minute video, and it'll be like, here's this amazing trade that I took today. And it's just him acting for the thing. And he basically later came out and said, well, what I'm doing is I have a bunch of different sim accounts and I do a different move on every one of them. And then I only show you the one that worked out that was good. So he admitted that it wasn't real. And then he comes back and he starts all over again. Like, he's realized this thing that, like, on the internet, there's so many people to fool that you can be exposed and then just, you know, disappear for a month and then come back and you get a completely new audience that has no clue who you are. Right? You're kind of surprised by that, but it happens. And he's done it many, many times. Maybe he's trying to turn a new leaf. I mean, I did see it on here, like, a lot trading live, but what is this? Live trade? So apparently he does stream it. Who's this Tory guy though? Oh, it's a girl. Of course. It's a very good looking girl. Okay, but what kind of videos did they have? Or is it just them reacting to crap? How to be a trading influencer? That is not very... You know, if you were a woman and you're in trading, I think that the first thing that you would, and you were streaming it, I think the first problem that you would deal with is tons of people coming in and saying, you're just doing it for the clout, you don't really enjoy trading, you're just one of those girls that, you know, feign interest in things to get our views and all of this sort of crap, right? And that can be a really difficult thing to deal with as a female content creator, right? And this girl is like, doesn't even hide it. Look, here's how you can be a trading influencer too. What the F? I don't know. So the thing with Patrick Wayland, I'm not going to say that he's the OG of fraud per se, because if you go and you're on stream and you're like lying about what you're doing on stream, that's certainly bad, but you're not necessarily causing somebody to give you money or something like that, right? Once you start like selling a course and saying, oh, you should take this course because I've made so much money, and then it turns out that you didn't, then it's fraud, right? So I to my knowledge, Patrick Wayland has not defrauded people of their money, but his channel is fake, essentially. Supposedly ICT is taking, no, it's because too many people called him out. He got too popular, essentially, right? Now he'll disappear, he'll come back in a year, and then he'll be trying to defraud everybody again. Probably. Guy like ICT can't stay away from it, I think. This is the first person I've seen. I've seen some girls in finance that are pretty good looking. This is the first one I've seen that has like a really huge following and has like the full e-girl look. Like he can, how can I can I make this bigger? I don't know if you can see it very well, but they do this thing with their face. I'm telling you, this is the secret. If you want to be an e-girl, I'm telling you the secret, right? And just look around her nose, and you can kind of see how it's a little bit more red than a normal person would be, right? Like her skin here is very, very light, and then the filters do it, and it gives you that e-girl look. It's basically like blush, but like they've gotten better at it. But you could see it. It doesn't look as strong here, but in the thumbnail you can really see it, or like right there on that thumbnail. See how rosy her cheeks are? She's probably, I mean, maybe she's a good influencer, but that just that she has that one video right there really rubs me the wrong way. It looks like she hasn't made a video in like 3 months though, so let's see here. How to stop. Actually, let's sort it by popular. Oh, there you go. Her most popular video is how to set up a Top Step funded account. Of course. And then our next most popular video is one with a big number on it. Of course. Thought she was trading oil futures. Wow, 2 years ago? Oh, okay. That's interesting. I guess I just find it interesting because I didn't think that there was anybody like that in our space, but apparently there is. But it also doesn't look like she really makes very many videos, so. Yes, I was talking about how to be an e-girl. You know what is the thing though, is if that's not what her intention is, like look, if you're genuinely interested in trading and you just want to trade and share that, or you think you found something and you want to share with that, then that's great. Don't do this to yourself. Don't do this and like undermine everything that you got going by saying, look, you can become an influencer too. Because then it just everything else that you got, it seems fake. And then you get idiots like me that will come up and be like, hey, look, see how she's doing all the e-girl stuff? And she's just fooling you. Ugh. Yeah, I shouldn't do this sort of stuff. I don't like talking about other people. I'll get going on it and then I'll turn around and be like, if you get a nice girl on, you'll have viewers. Maybe. What I should do is I should go and find a 19-year-old and just have her come over in here and do the streaming. And I'll just be like on a separate computer over here in the background, tell her everything to do. And, and then, yeah, you probably would get viewers. And by nice, I mean poops, of course. Of course. Ooh. Would hope not. See, so who is this person? Tori, if you watch this, you might be mad at some of the things that I've said, and I would have to apologize, right? But the thing that you should realize is the picture that you're presenting through your YouTube page is maybe not the one that you want to present, because maybe you are serious. Is that am I safe now? Like, that doesn't mean that like if you're a female streamer and you're gonna stream in the finance space that you need to be homely, okay? But don't make a video about a step-by-step beginner live stream guide. I don't think is a good title for a video. Like I watch as a serious somebody that wishes that the industry was more serious. I immediately see that and say, you're not serious. Just get a rainbow wig, it's cheaper. Well, remember I had the cat ears for a while, but you guys didn't seem to enjoy that. Actually, I take that back. Maybe we did well during that. I don't remember. Maybe I need to bring the cat ears back. I don't think I even have them anymore. Now look at that. The treasuries took another step. While I'm not paying attention, Seth, get yourself together. So you lost, you know. Well, no, I didn't. But the 10-year, what is with that? What the hell? Wait, I missed something. No. That's very interesting. So, remember earlier I was complaining that like, okay, the 5-year it's a sell, the 30-year it was like this. So it was like, it looks like it's mostly a sell, but the 10-year is flat. So that kind of suggests to me that I don't have a whole lot of edge here right now, that the flows aren't being very predictive in the 10-year at least, right? But then out of nowhere, badoosh. And look, if we look in the 6J, nothing there. It just did it on its own. So, it must be more of this stuff that Octavius has been talking about, that, you know, there's a lot of TLT calls and they can't handle it being, you know, closing above 90. And so it's coming back. It's coming back hard. What happened to Seth? You know, I'm just thinking about this. I'm thinking about how mad I am at myself for not flipping around and trying to take it this other direction. I actually thought that order at 24 was going to get filled. So, but it came really close, and I guess it didn't actually trade. Collins is speaking on CNBC. Let me come back over here. Maybe it was, we'll do whatever it takes to beat inflation. That must be what it is. You know what? I think I'm gonna hang on and do the degenerate thing and hang on and see if I can scratch it. Okay. Title to Top Steps video is to preserve that capital. I think that today is an options expiration and that you could see some wild flows coming through. And if you have something that predicts which way those flows are going to go, you should go for it. I don't think I have that over here in the treasuries. I think that the S&P 500 will buy. I would be very, very surprised if the S&P 500 closed below 4,500. And I think that the way that the flows are is it will probably actually close up and maybe even above 4,550 today. So that's not explicitly saying that I think that there will be buy orders that will come in, but rather I'm saying I kind of think the risk reward is in favor of you going long in S&P 500, especially since we've had this little pullback now. The treasuries I'm not so sure about. The treasuries, it seems like they really don't want that TLT to close above 90. And that might be some of the selling flows that we're seeing. But something happened there, like somebody sold that. That must have been Fed's Goolsby talking about, you know, we need to do stuff about inflation. Collins is on CNBC and Goolsby has been speaking, right? So I think that move was Fed speaker. And so I'm kind of making the calculation that they're not going to say anything too important, and that after they're done speaking, the market will just retrace it. But I could be like so dead wrong. Yeah, that's Sim. I definitely wouldn't be playing a risk like that with my live account, would I? This one over here in ES. If I had a large enough account to swing trade ES, I think I would be doing this one over in ES. What do you think about the DR method? I've never heard of it. Sounds like bullcrap. So the fact that it's a method says to me that it probably doesn't actually work. Right? I can tell you like stylized behaviors of markets and things like that, but I can't give you a strategy, because if I gave you a strategy, everybody would have the strategy and the market's competitive. How are you going to be competitive with something that everybody else has? That doesn't work that way. So anybody out there trying to sell you a method or a setup or something like that probably doesn't know what they're talking about. Or they're just outright trying to get money from you. What do you think of people who made a lot of money trading just price action? I don't think that they made a lot of money trading just price action. I think that they made a lot of money by taking on excessive risks. So the way that most of these guys do it is I'll have an 8-tick stop and a 4-tick profit target, right? Well, if you do that, you're going to win like 80% of the time. And if you know how to trade it when the market is relatively quiet at that time, then like I think it works a lot. But it's got a fat tail to it. So you're going to run into a time period where it just stops you out of every trade that you try to take. All of a sudden, you used to have like an 80% win rate, and now all of a sudden you have like a 50% win rate. Except for that all of those losers are twice as big. What usually happens to price action traders is they're successful for like a year, 6 months to 2 years, and then they blow the account all at once. And I say, if you've been trading, you made profits, but then you give it all up after a few years, then all you did was waste time. And by the way, I have a video. If you go and watch the Smart Money Concepts video that's like the most recent video on the channel, I do a back test to show you how there are some strategies in price action that have been profitable, and as people jumped on board it stopped making money. That they were like only making money, like, oh, it's so, you gotta watch the video, man. I'm not gonna ruin it for you. Just go and watch the video on the Smart Money Concepts. It's the most interesting thing I've ever seen, because it basically shows how to have an edge, you have to have an edge. You can't do the same thing that everybody else is doing. Like a strategy being a little bit profitable maybe helps, but if it gets too profitable, it will destroy the strategy. And that's what I prove in that Smart Money Concepts video. Or let's say that's what I show evidence for. He worked in, what is SLP? And he's sharing core algo secrets. Okay, they're either not really secrets. They're things that like anybody in trading that's gotten into algorithms will probably know, or he's completely full of shit. I don't really get those people. If you make good money in this business for a year, then you should make enough money to retire. No, because when they make money from it, it's like they made $20,000, right? You're not gonna live off of that. Now, every once in a while, there will be somebody that will become a millionaire off of options. And then I'm like, why didn't you just stop? Why don't you just stop? Or at least, just go back to what you were doing, but stop risking, because you can retire now. He makes $200K from his academy. Oh, wow. That's crazy. Well, then it's definitely a scam. I definitely wouldn't look at it. It's so tough, because what you want to think is, oh, there's so many people that's popular, I want to go and look at it, right? Because people will ask me all the time, why don't you go and backtest that? You go and watch that and then tell us if it works, or take a look, right? I can't tell you how many things like this I've looked at, like literally hundreds of things like this that I've looked at, and it always comes out the same time. Why would I? And like, I just know the things to look for, right? Like, because I know now, like, how the market works. Every order matters. So if you've got 1,000 people out there doing that same thing, you're how are you going to beat them? How are you going to win in that situation? It's not going to provide you an edge. And so, like, I don't even need to waste my time doing that. I could. So like, if you could make the case to me that making a video about it would really help the channel out, I suppose, then maybe that's like why I did it for Smart Money Concepts, because it had gotten popular enough that we thought we could poach some viewers for it. But then the thing is whenever I make a video like that, they don't really take off. So every setup I have ever been sold are all worthless. So the ICT video is, sorry, the smart money concepts video that I'm talking about. This is basically what ICT does, right? Wyckoff, yeah, I don't think it helps you. It's kind of an interesting theory and everything else, but so here's what I would say to you. How do you prove something? Right? This is the thing that I think is hard for people to wrap their head around a little bit at the first. But once I explain it to you, it should be like, oh yeah, no, that totally makes sense. Okay, so if Seth has a pattern and he trades that pattern for 5 years, and at the end of 5 years, he is profitable all 5 of those years on a risk-adjusted basis, which means I'm not just making the index. Okay, that can kind of happen, but that the amount of risk that so I've traded over that 5 years, and my Sharpe ratio is higher than the Sharpe ratio of if you were just buying and holding the S&P 500. Okay, have I proven something? What have I proven at that point? If I can show you all of my broker records, everything, prove every trade that I've taken, right? What have I proven to you? I've proven to you that Seth was profitable over that 5-year period. Okay. Now, does that prove that Seth is likely to be profitable the next 5 years? No, it does not. Past performance is not indicative of future results. Does that prove that the strategy Seth trades is a strategy that works? No, it doesn't. Because I might not have actually have been trading the strategy that I said I did. I might have been lucky. I might be fake. Like, there's all of these things that are in there that don't actually prove the strategy, right? So how do I prove a strategy to you? Well, what I have to do a strategy is I have to make it reproducible, because that means you need to have empirical evidence. Empirical means that it's evidence that can be observed and verified by other people. So everybody should be able to go in and look at what I did and run it against the data and see that, like, it works out, right? So to make it repeatable like that, you basically have to write an algorithm, right? Now, if I wrote an algorithm in NinjaTrader 8, backtested it over 5 years, it met all of those qualifications, and then I gave you the algorithm, I told you the time frame that I ran it on, then you'd be able to verify it. Then I've proven that the strategy works, right? That's proof. That's empirical data. So what I would say when you're looking for who to listen to and what kind of information to actually consume, because you could spend years, like, so this Al Brooks stuff, those books are so hard to get through, man. Like, you waste all this time reading that stuff. I don't think that it helps you at all. You're just learning a bunch of junk. So how do you know where to spend your time? Empirical evidence. Can they come in and they can show you, look, we have an algorithm here, and here's how it performs. We have a pattern, we have a setup, here's how it performs. And they give you enough data too, because that's the other thing. Is like, it can't just be 1 year. 5 years. 5 years minimum. 5 years minimum, 1,000 trades. And then maybe you can judge the performance of it. And if it's an algorithm, you can actually look at it and do it yourself, right? They have empirical evidence, then listen to them by all means. Although, anybody that's smart enough to come up with an algorithm like that is profitable on a risk-adjusted basis over a 5-year time period would not be dumb enough to put it on the internet, right? They would keep their results, and they would start a hedge fund, and you could invest in them, and they would trade it for you. Okay, but they wouldn't just put it out there. Not a 5-year profitable stretch. No way. Well, you work really hard for something like that, and then you're going to give it to the internet. They're all going to trade it. They're going to destroy the strategy. You would never do that, right? That's what I mean, empirical evidence. Okay, so I don't give you setups. Now, what I do kind of changes every day because I'm trying to use informational inefficiencies and the news and everything. Okay, but if you go and you watch the videos, I cite studies. Almost all of those videos, like I tell you, like, especially the one about stylized behavior for the markets, proven market behaviors, and the inelastic market hypothesis. So it basically proves that that price is just completely nonsense. Those are backed up by studies, and you can go and read the academic papers, go find them online, read them, and see their methodology and their data and everything. They're backed by empirical evidence, right? That's the difference. So if they don't have empirical evidence, it's noise. Just ignore it. Just ignore it. Yeah, so if you really want to trade profitably and sustainably, I would go to my channel and watch the order flow video series. And then I would also go to speculatorseth.com/strategy.html. And if you put your email in there, it will email you a PDF where I go into a little bit more detail about how those stylized behaviors of markets can kind of help you optimize your positions and manage your positions. And once you've kind of gotten to that framework and you understand how the market actually works and how that results in certain kind of behaviors, then you have a framework that you can work from to try and find an edge like that yourself, essentially. Like if you really want to do a technical edge and not be more informational inefficiency like me, you know, you will understand enough about the market to at least stand a chance of finding something. And then I also have a video series that is not very popular, but I have one about developing strategies. It's like 4 or 5 videos long. You go and watch that, and that will give you what you need to do about how to actually do the science of it. So that's what I'd recommend. That, or you come and you trade informational inefficiency like me, which would mean go and read as much Zero Hedge, Wall Street Journal, CNBC, etc. as you can. Read all the analyst reports that you can. Come in here to the stream and into Discord and discuss and debate with people what you think are moving the markets and driving flows that day. And use that information to find times where you know something that is extremely likely to predict future orders and you get a trade off of it. And that's how we trade. Or, yeah, Jiwi's got the option number 3, YOLO it on options. That's Pat straight. Dude, you know, the Pats one was really jarring to me. Because all I ever knew was that it was so popular. Like, you'd go on the subreddit, and yeah, you probably need a new Squawk as well, or at least a Twitter subscription so you can use TweetDeck. Anyways, I'd go on Reddit, and all these people would always be praising Pat's thing. Oh, this is price action. Okay, I'll go and read price action, because I thought I want to make a video about price action, because I really don't think that these strategies work. I think that you know, people are just being fooled by randomness. So I got a hold of the book, and I don't remember where I got it from, but I got a hold of it and I read it, and I think I read it in an hour. Okay. Like you get the PDF and it's like 300 pages, but there's only like 15 words on a page or something. Like the font is ridiculously huge. Okay. So it's a very, very quick read. And everything that was in it was like, you know, the trend is your friend until it ends and stuff. It was nonsense. It wasn't an actual real strategy for the most part. It was just kind of like the same general trader platitudes that everybody shares with each other. And then his strategy essentially came down to have a really big stop relative to your target and trade areas where price is folding back on itself, where there's pullbacks. And then that was his strategy. And it was so jarring, because it was like this course that I had seen so many people praise was absolute junk. It was trash. It was complete trash. Like, I just can't. Okay, look, this is a book. Trades, Quotes, and Prices. Financial Markets Under the Microscope by Jean-Philippe Bouchot, Julius Monod, Jonathan Donier, and Martin Gould. Jean-Philippe Bouchot is the administrator of the archive.org quantitative finance group. Okay. So this is like the top quant in finance right now. Jean-Philippe. Well, in my opinion. Okay. He actually only just this year had a study published in a major publication finally, in Economics magazine or something like that. I forget what it was. Okay. He funded a CTA fund called Capital Fund Management. Can you imagine? How do you get the name Capital Fund Management? Wouldn't that be like the most obvious name for a CTA hedge fund? How did they get that name? I don't know. Okay. But it is, and that fund, like when you're looking at because they hand out awards for 5-year performance. Okay. The Discus Fund, which is a CTA following strategy, is the award winner over a 5-year period. At least it was last year. Okay. So this is like an award winning hedge fund. This guy was one of the founders of it. Okay. And look at what you get in this book. Okay. Hard math. Let me show you the full screen, because it seems like we've got some new people in here. So I enjoy sharing this. Okay, look. Hard math. Integrals, calculus. Like serious stuff. And then you come to the end of the chapter. Hold on. I can't seem to grab the page for some reason. Oh, that's probably a bad example. Okay. The end of every chapter references. Look at those. Every one of those is a study that you could go on, find on archive.org or wherever else and read. Like it's insane. Some of these chapters have like multiple pages of references at the end. It's like insane. Here you go. Look at this one. Those are all studies. Those are all studies that you could go and read, right? Like everything is cited. Everything is backed by empirical evidence. Like this is the Bible. This should be every trader's Bible. Practically, this is everything that we know, that we can prove about how markets actually behave. And you know what they don't talk about in this book? Price action, trend lines, RSIs, none of that bullshit. None of it. Because there's no edge in any of that stuff. That's what you should be looking for. And yeah, that's too heavy for a noob. If you want to have an edge, that's what you got to do, right? You've got to go and learn the things and understand the things that other people are unwilling or unable to do. This market's competitive. And the whole thing is that book is public, right? So, again, how are you going to get an edge by following something that everybody else has? Well, most retail traders don't have that. Most retail traders don't understand that stuff. But the people at the banks, they do. So you're not going to have an edge over the people at the banks, are you? So really, all of that's a crazy book with tons of citations and math and that will just get you to break even. And you're going to have to do further work beyond that. Yeah. So it's a rough road, but that's what I would do if you want to become a profitable trader. preach. I hate that I have to like thumb through it and pause and everything. It kind of, I feel like it kind of hurts the dramatics. I'm going through my tabs now, like looking to close stuff, and I came back to that one trader, and I'm like, oh, it's kind of weird that they posted pretty regularly until like a month or two ago, and I wonder if they just stopped trading. Maybe that's somebody we could teach something. I really wish, like I see these guys like Daniel Inskeep and stuff like that, and it seems like they all get driven towards price action trading, and I get why, because you know, if you want to have a profitable month, that's probably the easiest way to do it. I'm just telling you, like in the long run, it doesn't work. I would really like to get one of these people and have them learn all of that stuff and see the shift, you know. And that person was maybe somebody that would they could understand it. I think that it was actually funny. I did get Daniel Inskeep to respond to something once, but it was like an algorithm video, and he was like, "It's over my head." And I'm like, "Well, I think you're smart. I think you could figure it out. Don't discount yourself so much, you know." And I guess that thing is that book, right? It is a hard book. Okay, you can do it. If you took calculus in school, you can do it. You're going to have to study. You're going to have to study it like you'd studied in school. You have to get out a paper and pencil and write things down, and you're going to have to read things multiple times, and you're going to have to study it over, like, think of it like a Bible, okay? It's not I read this in a weekend and I'm done. It's I'm going to reread it over and over and over until I really feel like I understand it. You can do it. You think that we're going to get back to 24? I does so far look like that. My theory that the Fed speakers didn't actually say anything important, and that this will revert back up eventually, does seem to be playing out. Oh yeah, I'm still heads full screen, huh? Look at that's because I just look so good. Don't need some e-girl on this stream. What's bad? What is this not enough for you? Why is this not enough? You people. Actually, was I kind of tried to clean up my shave line. Did I do a good job? I think I did a pretty good job. My beard is still kind of a little bit like there's so much gray in it. Too old, Seth. You're too old. Another 2 ticks down. This really looks like that. Yeah, that really must have been the Fed speaker, because this thing really looks dead to me otherwise. Now the S&P 500, that also, like, I don't know what's with that sell on the open, but like they're not doing anything now. Traders, we should get an e-girl. Seth, we have an e-girl at home. There we go. And I mean, I know I joke, like, I tell you what, can you tell that it's a difficult issue for me to discuss? Because I think it's because I have conflicting feelings about it, right? And I think you have to get back to some deep things that I believe, okay? I believe that men and women manage risk differently, and that there are some serious advantages to the way that women manage risk, and that there are big benefits to having women in your industry. Like, if I was starting a hedge fund, I would want there to be female decision makers as a part of that fund, contributing to the discussion, because they think differently, they approach risk differently, and it's an advantage. They have disadvantages too, because sometimes they don't put the risk on when they need to, but they do approach it differently. And I also believe that the industry has treated women very unfairly. Like, the reality is that finance attracts people that take on risk, and having a lot of testosterone increases your propensity for risky behavior. That's kind of what testosterone does. And so a lot of those people, men, that are in finance are more prone to do something inappropriate, to make advances on women or harass them in some way. And so if you're a woman and you're going into the financial industry, don't shoot the messenger, but I'm just telling you, it's a rough road. I think that for the right people, it's worth it. And if you want to do that, you should totally go for it. But you got to understand what you're going to be up against. It's kind of stacked against you, because there are a lot of guys like that out there. Okay. So that's something that, so when I see, like, we've had some girls here on the stream, it always makes me very happy, because I think that we should have more of them. But I also think that many women will degrade themselves, and perhaps unintentionally. Like, it's not like you can't be good looking. It's not that, but it's like, when you present yourself as like, my looks are the only thing that I've got going for me, or my looks are what got me to where I am, you know, you're kind of presenting this picture to people that a lot of men will interpret as that you're a bimbo, essentially. And I don't think that all women do this intentionally, right? So that's where, like, this kind of, like, these two things I think conflict with each other, because it's like, oh, well, we want more women to be in finance, but then, this one just kind of looks like an e-girl to me, and maybe they're not. I'm just saying that's the impressions that they're giving you through, like, their thumbnails and the videos that they've chosen to make, you know? And so there's this conflict there, and then there's all these people that are willing to jump down your throat for any reason, right? To just be like, well, if you don't just absolutely support every woman, and, you know, if you offer any kind of criticism of people, then you need to be canceled, which is not helpful, right? Because I think that it's a difficult industry to get into. It's a difficult thing to do, and especially for women, because the deck is kind of stacked against you, and you need all the help you can get. And we're not doing you any good if we don't give you valid criticism, you know? So when I come up to it, it's kind of like, and then you can see whenever I get anxious about something like that, then it's like, it's hard for me to forget about it. And so then it comes up over and over again. So I'm like, did I make what I think clear enough? Well, okay, let's talk about it again. Out of 10 traders who made it, 7 will be women, but those 3 men will make... No, I don't think so. I don't think so. I think that if you took 100 traders, and probably 5 of them will be women, but 2 of them will be successful. Like, that's usually how it works. But those 5 women probably wouldn't be day traders. That's the thing. Because that would be too much risk for them. They would say, oh, that doesn't make much sense based on my risk tolerance. So they would almost, if they were going to actually trade, they would almost always go to stock picking or swing trading. But if you're looking to make money, probably is the better option. I think women are too emotional for trading. The ones I know who tried gave up because of stress. Well, okay, so I don't completely understand the differences between how men and women deal with stress. I don't think that it's actually true that women have a harder time dealing with stress. I also don't think it's true that women are more emotional. So this is kind of an interesting thing about it is women, it's not emotional. In fact, men are more emotional than women, actually. Or rather, the emotions that men experience that are unique to men are much stronger than the emotions that women experience that are unique to women, right? Like, as a guy, you might not completely understand it. You might not completely be interested in it, but I think you can understand the love that a mother has for her child. And those are emotions that they experience, that they get oxytocin that you as a man don't get, especially when they give birth. And so they feel differently about it. So of course you can't completely understand it, but you can still kind of empathize with it. Okay. Women cannot fathom or empathize at all with the anger that a man will experience, right? Testosterone will cause anger. When you get angry, you can just feel completely out of control. And there is nothing that is even remotely. So there's many women that, like, they're doing gender transition, or I've heard stories where like they accidentally touched, got testosterone lotion on their skin because it can absorb through your skin and stuff like that. And they were saying there was like, it was so insane that all of, that and interest in sexual things as well. But I digress. They're very strong. So my understanding is that men are actually more emotional than women. Okay. But women are on average more neurotic, which means that they are more prone to negative emotions than men. But this is probably part of why they look at and manage risk differently. They are more prone to feeling anxiety or feeling sad about something like that. And that makes them want to not take on as much risk. But like I said, if you're conscious and you understand what you're doing and everything, that can be a real advantage. That's been a real advantage to me. If I was like most people, I probably would have blown any chance that I ever had at trading, and I wouldn't be able to do it anymore, right? But because I've always been very conservative from the very beginning, I'm able to keep trading. So this is an advantage. But on the stress part, I think it's probably true that most women are not raised to do that. Like, to come in and take hit after hit, day after day for years in order to try and master something, that takes real grit. And I don't think that it's that women are capable of that, but I just don't think that in our culture we teach them that. So it wouldn't be surprising to me to see a lot of women that try to do it and give up. Yeah. But I don't think that one is necessarily, it's interesting because there are things that are like genuine gender differences, and then there's other things that are probably cultural. Some people seem to think that all gender differences are cultural, which is kind of nonsense, but How do you prove which ones are and aren't? I guess this kind of depends on things, but. You saying that John thought that? Oh, I don't know. I would bet you that it would almost be like 100 to 1. Like, not very many women are interested in it. That's for sure. Honestly, didn't expect such a slow option expiration date in the E-mini. Yeah, it is. Well, it's not just slow. I would say the amount of volume that is trading is pretty good, but the amount of like range boundedness is quite insane, right? I do think, though, probably what's going to happen, my prediction is that later in the day you will get a move. I think that it will be to the upside, but it could be to the downside to make it back to 4,500, right? But I think that there will be some flows coming into the close. And then on Monday, you're probably going to see some really interesting stuff happen. Though I'm hoping that it's still long. We'll see. Yeah, women are more interested in people and men are more interested in things. But isn't that kind of one of the things that I'm trying to say, though? Is that the market is very much about people. We've miseducated the public about what markets are actually about, and we've turned it into a thing when really it's the decisions of large numbers of people. I'm telling you, man, because of it's funny. There are so many things about trading and markets that women are actually quite naturally adept at, but because it involves taking risk, most women aren't interested in it. And the thing is that's kind of encouraging to me is that since 2020, we have seen a good number of women step up and I think show you how it's done. I really don't like Cathie Wood. I got to tell you, I think that she's an absolute nut, but she has been up there and she's in front and she's serious, and I think that that's generally a good thing. There's this girl named, I think you say her name Kyla Scanton or something like that, on TikTok, and I think she actually has a deal with Bloomberg now. She's really good. A lot of the time, the stuff that she talks about, I'm kind of like, who cares, right? But she's serious. She understands monetary policy. You can clearly tell that she worked for a bank at one point. She's great. She's able to take advantage of her femininity to become popular without degrading herself, and being unserious. I think you'll see more, but there's a lot of people out there also that I feel like are just kind of trying to jump on the bandwagon, become an influencer on something, You're not going to last very long if you're trying to do that in futures. Not that I don't know if you can really ever truly. Do you think that? So, it's about time to go. Do you think that futures has real, genuine influencers? I don't know if it does. I mean, I think that Futures Trader 71 and Jim Miorio and Anthony Crudelli, those are probably the three biggest ones in here. But I don't really consider them influencers per se, Like, I think that if they come out and they say, this is the best platform, you should use this platform, I don't think that they would actually have that much sway among people. Like, I think that people in the futures industry are like discerning enough and like, what do we say? We did like a psychological test, and it was how agreeable you were. Traders are very low in agreeableness. So I don't know if influencers works the same way in our industries as it does other industries. So I think that there are some people that come in with this like, oh, I'm going to be an influencer with this, and it doesn't actually work out. Which is also kind of funny because I never came in with the intention of being an influencer. I just did it on a whim because there was a contest and then people kept watching. You guys if I just came in here every week and nobody watched it at all, then maybe I would stop streaming it. But you keep coming over here, so I have to keep going. I love you guys too much. Really? I scored very high on agreeable? Really? That's interesting. Huh. I don't know. Yeah, so it's in the psychology channel on the Discord. I think it's a pinned post in the psychology channel of the Discord. But basically a newspaper had this quiz that you could take that would show you what you were, and you can create a group ID so that you can see how people in your family or your business or whatever rate. So we made one for our Discord, and everything is relatively normal relative to the population, but we're low in agreeableness, very low in agreeableness. You can tell I'm low in agreeableness, right? Like, you guys can't say anything without me thinking like, nah, I don't think I completely agree with that, you know? Probably successful streamers are probably agreeable, right? I'm not. We're getting another sell here, so I think I'm not gonna mess with this anymore. I'm gonna close out that trade at a loss. That sucks. Man, I really just got that one completely wrong, right? I took another contract on there just to try and get it to show up, and it never got filled, and then I was stuck. Because I would have still been in profit otherwise. So that sucks that I mismanaged it in that form. But this having a second wave of selling in ZN like that contradicts the theory I had that it was just a temporary little like impulsive move off of something that somebody said. So that takes me back to the TLT theory. Is it possible that TLT gets below 88? I think that would have to be a really huge down move, so I don't think that that's going to happen. Oh wow, you're 6'3"? Jeez. I never get shit in traffic. That's funny, dude. You know, it's probably a good thing for me that you can't really tell size through the camera, because I'm average height, but I'm very, you know, like this is my watch. Like, the watch will go over my wrist very easily. That's a small watch. It's a small size. There's this watch I really wanted. I was like, oh, this watch is just the coolest watch I think I've found. And I finally found one at a department store. And, you know, tried it on. And I instantly hated it. It was too big. I hated it. I was like, oh my gosh. Okay, I gotta get going. I will see you Monday. Stay excellent.